/CHN. Good evening, everyone, and welcome to our financial market update. Global markets today presented a mixed picture, with a clear risk-off sentiment dominating the latter half of the trading session, though with significant structural divergences. Let's dive into the closing numbers. In the U.S., major indices retreated across the board. The Dow Jones Industrial Average fell 1.21%, closing at 50,687.07 points. The S&P 500 was down 0.74% to 7,553.68, and the Nasdaq saw a 0.89% decline, settling at 26,853.98. The market's fear gauge, the VIX index, edged up a modest 1.77% to 16.06, indicating a measured sell-off rather than a panic-driven stampede. From a market characteristic perspective, today's action can be best described as a kill-down washout. U.S. equities pulled back from historical highs, with tech stocks leading the decline. However, the mild VIX reading suggests this was primarily a combination of profit-taking and the impact of escalating geopolitical tensions. The money flow clearly gravitated towards cash and inflation-hedging assets like energy and commodities. For instance, the U.S. energy sector bucked the trend, rising 1.38%, and WTI crude oil also gained 0.88%, closing at $95.55 a barrel. This clearly signals that capital is shifting towards inflation-hedging assets amid the escalating geopolitical conflict. Conversely, U.S. tech stocks experienced significant outflows. A review of global market paths reveals notable divergence. In Asia, Japan's Nikkei 225 futures surged 2.8% to hit a new all-time high, while China's Chi-Next index broke above 4,200 points for the first time, with the Shanghai Composite up 0.22% and the Shenzhen Component Index gaining 0.73%. This strength was largely fueled by optimism in the AI and semiconductor sectors. However, Hong Kong's Hang Seng Index fell 1.7%, the Hang Seng Tech Index dropped 2.4%, and Indonesia's IHSG plunged a sharp 4.94%, highlighting inconsistent risk appetites within Asia and capital withdrawal from some emerging markets. European markets, meanwhile, softened generally, with the Pan-European Stock 600 down 0.4%, and banking and real estate stocks under pressure. Europe failed to carry forward Asia's optimism, instead extending the risk-off narrative. The U.S. market, after opening, steadily moved lower, with the information technology sector leading declines at 1.52%. It completely failed to embrace the AI optimism seen in Asia, instead amplifying the risk-averse logic from Europe. This confirms a short-term turning point in risk appetite, with U.S. equities retreating from historical highs and tech stocks leading the way down. Significantly, a new structural signal emerged today. A report from the European Central